Hello, traders. Happy Friday to you. And I'm so grateful to be alive and to be with you here this morning. Welcome, guys, and let's get this party started. Before we kickstart the session, you know how we do it. We want to confirm that we are good to go. Let me know you can see my screen clearly and you can hear my voice by typing hi in the comment section, as this will give me a positive feedback that we are very good to go this morning. So I would like to see some comments in the comment section. That is, you can see my screen and you can hear my voice. So do that please by typing hi in the comment section. Okay, so I try to load up my comment box and then let's see what we have. All right, so okay, here we go. All right, okay, I can see Tomasco. Hi, how are you? Thank you very much. I can see 2799. Thank you very much. 2336, 202. Okay, thank you very much. Good morning to you. Hey, Carrie, good morning. Yes, it's the last day of the month of June. Thank you, Carrie. Okay, 6341. Thank you very much. Next 57. All right, all right. So I will take this as a positive confirmation that we are good to go this morning. My name is Sheriff Daramola, as usual, of course. I welcome you all to yet another session, which is promising to be an exciting one and at the same time very insightful, as we are going to be reviewing how well the financial instruments we have been monitoring since the beginning of the week has been doing, and at the same time get ready for the New York session today. And considering the fact that today is the last trading day of the week and the month, there is always this psychological expectation as regards to what might likely happen today. And one of the things we might be seeing today is the tendency of price action to become volatile or erratic price movement that may likely arise due to profit-taking activities, which is peculiar with last trading days of the week and month. So we are going to be taking all this into consideration while we look at the current market structure from a technical standpoint. And for those who are joining us for the first time, you are highly welcome on board. And what we simply do here is to come together as a community gathering in anticipation of the New York trading session. And during this time, we will review and manage our current positions while we also aim to position ourselves strategically for today's trading session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And since this is your first time, it might be a little bit overwhelming because it will, of course, take some time for you to acclimatize to the style of this trading. So try as much as possible to stay tuned in till the end of the session and be with us in our subsequent session. And trust me, with time, you will eventually be able to use the information you have gathered here to make an independent decision on your account. So once again, you are all welcome. So with that being said, let's dive right into the business for today. And you know how we do it. The first thing we want to be doing is to check the economic calendar to see what fundamental factors majority in the market will be looking forward to today. And in fact, these fundamental factors often manifest on the charts in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. And of course, this will help us to be able to be on standby and position ourselves in such a way that we can catch any potential opportunity prior, during, and even after this major event. So with that being said, we shall be diving into the economic calendar. And on the economic calendar, I was able to pull out a couple of high impact events that we are going to be looking out for today. And one of the events is from the UK economic docket, and that is the GDP quarter on quarter and year on year. And we already have that took place about 4 hours ago, and we can see the data came in just as expected on both occasions, giving us a sign that there is no much difference from the previous data. So we are going to be looking at how the market has reacted to this event on the GBPUSD and see how we are going to be positioning ourselves ahead of the New York session today. Then also we have the from the US economic docket, we have the what's it called again? Hold on a second. So from the US economic docket, we have the core personal consumption expenditure price index. So we have for the month on month and the year on year coming up in about an hour. And this index is normally released by the US Bureau of Economic Analysis, and it gives us the average amount of money that consumers spend within a month. So this core excludes seasonal volatile products such as foods and energy in order to capture an accurate calculation of the expenditure. It is a very significant indicator of inflation. So a high reading is seen as bullish, while a low reading is seen as bearish for the US dollar. Now, if you look at the previous data we have here on the month on month, we have about 0.4% compared to the previous 0.4% as a consensus projection compared to the previous data at 0.4. Then on the year on year, we have 4.7, the previous data, and we're expecting that it's going to be the same. So we are going to be looking forward to what the actual data is going to be like on this economic event, which is coming up in about an hour. Will it be as expected, below expectation, or even beyond expectation? But one thing we are going to be doing in this community is to ensure that we can be able to position ourselves in such a way that we can capture any potential move prior, within, and even after this event. So with that being said, here we shall be diving right into the business to look at the current market structure from a technical standpoint. So as usual, the first commodity we are going to be taking this morning is going to be the US oil spot. Now, on the US oil spot, it has been quite an interesting week for us on this commodity, as we had situations where we had some selling opportunities, and during the second half of the week, we had the privilege of buying the US oil spot. So we want to look at how the week started for us before we go into the details of what our expectation is going to be like for today. So at the beginning of the week, we acknowledge how price action was initially caught within a range just right between the $70 level and the $69 area to give us an insight into the level of indecision in this particular market. And in addition to this range here, we had a trend line which was an ascending one that has been guiding that bullish momentum for like 2 days before that live session on Monday. And we said here that if price action continues to trade above that trend line, we will continue to look out for opportunities to buy the US oil spot. But if we do have a breakdown of this trend line, we shall be looking out for opportunities to sell. And in fact, this was exactly what happened. We saw breakdown of the trend line, retest of structure, and with our sell stop order placed below the $69.50 level, which happens to be our key level for the week, we had our first sell position for the week triggered. And in fact, we saw how price action moved significantly well in our favor, moved over 200 pips, And remember also, we had the privilege of maximizing this potential by adding more positions at the breakdown of the $69 area, and that one also moved about over 140 pips in our favor before we started seeing this consolidation phase began during the second day and third day of this week. And remember, on Wednesday, we acknowledge how we have a consolidation phase here between the $68.20 level and the $67.55 area to give us an insight into the indecision that was going on around that area. And for the fact that price action was sitting on a very robust demand zone, we were anticipating a buy opportunity. So for the sake of clarity here, let's scale up into the 4 hours time frame so that I can show you the demand zone that I am talking about here. Now, right here on the 4 hours time frame, this is what we saw at the beginning of the week. We saw how price action was ranging between the $73.50 level and the $67.50 area since the beginning of this month, which emphasized that there is a level of indecision at this particular point in time. But one interesting thing that our center of focus was at the beginning of this week was the fact of how the $67.50 area had been a strong buying niche in this market. Now, if you look at the structure closely, you will see how that area has been, how sellers have struggled when price action got into that area. And the inability of sellers to break through this area made this area a demand zone to watch out for buying opportunities this week. We saw how buyers jumped in to negate all sellers' attempts here. We saw the same thing also happen during the course of last week, and during the midweek of this present week we saw this whole consolidation phase go on around that area. And for the fact that price action remains above that demand zone, we had no other choice than to look out for buying opportunity. So what we did on Wednesday was to position ourselves just right above the $68.20 level to capture that bullish move to the upside. And since then, we have been buying the US All Spot. And if you still have a buy position running right now, we have price move over 200 pips in our favor before this whole sell pressure we have been noticing in the last couple of hours. So for those who have been part of this profitable journey on the US All Spot, well done to you guys for being on standby to catch this move. So right now, what we are going to be doing now is to try to see how to position ourselves ahead of the New York session. Then one more thing I would like us to take into consideration is the fact that today is the last trading day of the month, which is always peculiar with profit-taking activities, which would reflect on the chart as price action moving in the opposite direction of the prior leading price action. Now, when we scale down into the 1 hour time frame, I initially had a buy position triggered above the $70 area, but right now price action is at break even at this point. But if we are going to be trading the US All Spot today, how do we intend to position ourselves for any trading opportunity? Well, the first thing I did this morning while trying to decipher what is likely going to be happening today is to first of all acknowledge this ascending trend line, which has been a major determinant of price movement since Tuesday of this week. And if you look at the structure closely, you will see how this level was initially a demand zone. As you can see, buy pressure resume around this area. Then we saw the breakdown retest happen here. We saw selling pressure above this level, as you can see. And then we saw a retest again happen around here before the breakout of that structure happened on Wednesday. And since the breakout of this trend line happened on Wednesday, you will see how price action had continued to remain above that trend line since then, which further emphasized the level of buying strength in this particular market till this present moment. And with this situation we have here, it is quite reasonable that we continue to look out for buying opportunity as long as price action remains above this trend line. And as you can see, price still remains above that structure. So I will zoom right into where the current market structure is right now, which is just right above that resistant level which we identified at the beginning of the week, which is the $70 mark. And one important thing about the $70 mark at this particular juncture in the market is that it also shares a confluence with that ascending trend line that has been supporting this bullish momentum since the beginning of this week. So this is going to be the parameters that we are going to be using to guide our trading activity for today. So what this simply means is that as long as price action remains above both the $70 level and the ascending trend line, we would have no other choice than to continue to look out for buying opportunities in this particular market. So like I told you earlier, I already took advantage of this buy position around this area, hoping that price action will continue to the upside. Now, I'm still looking forward to more opportunities. We have a level here. This is the new resistance level at the $70.60 area, which happens to be the highest point price action has been for this week. So I would want to see another breakout of the structure to be able to add more position to my existing trade. So presently I'm having a buy stop order above the $70.60 area to capture that move to the upside. Now, one thing I would like to say about having a buy stop order here, for those who already are profitable on the US All Spot so far this week, that is, you have a profit on the US All Spot, well, we can still leverage on the profit we have made so far to test waters around the $70.60 area to capture that move to the upside. But if you are just joining us and you want to take a buy position here, I would rather say that you wait for a breakout to happen first of all, then you scale down to your lower time frame where you will look out for price action to come back, retest the structure so that we can join that bullish move to the upside. So that is how we are going to be buying today, unless this structure I just visualize happen, we are not going to be thinking of buying. Now, in as much as we're looking out for buying opportunities in this particular market, it is quite reasonable that we also take into consideration the potentials that the sellers also have at this particular point in time. And the reason why we are also going to be considering the sellers' expectations here is for the fact that since the beginning of the week, we have seen how since yesterday, we saw how price action rejected the $70.60 area, giving us a clue of sellers' presence around that area. Then we saw the same thing also happen during the early hours of today as soon as price action got into that $70.60 level. And with this continued rejection of the $70.60 level, it is quite clear that sellers are very present around that area, hereby negating all attempt by the buyers to break through that structure. Now, if the selling pressure around the $70.60 level continues, then we might likely be seeing a sell-off for today. And if we are going to be seeing a sell-off, what do we want to see on this chart that will make us change our bias from bullish to bearish? Now, remember, we had a trend line which we identified earlier, saying that it's going to be serving as a yardstick to guide trading activity for today. So for me to sell the US All Spot, I would want to see price action drop below the trend line, breaching that trend line to the downside. Then at this point, we want to be seeing this as a signal that we are likely going to be selling the US All Spot for today. And in fact, if price action breaks down that trend line, it will be a sign that sellers, the trend line may no longer have the capacity to negate the bearish momentum anymore. So once we have the breakdown happen, remember, we are not getting too excited. We shall scale down into a lower time frame. It could be your 15 minutes, 10 minutes or 5 minutes time frame to look out for confirmations which would reflect on the chart as price action coming back to retest the trend line or the $70 area, where continued selling pressure below the structure will be what we are going to be looking out for to join a bearish move. And in fact, if price action continues to the downside, we have key structures that we are going to be using to maximize the potential of this bearish move. So we have the $69.50 level and also the $69 area, where a breakdown retest of the structures will welcome more opportunities in this market. So this is how we are going to be managing our trade on the US All Spot for today. So you want to mark these levels out on your chart so that you can be able to use it as a reference point to guide your trading activity for today. So I will be taking the next 10 to 15 seconds to read through the comment section and see if there are any questions, and you can also take that time to mark these levels out or screenshot my screen if you want to, so that you can use it as a reference point to guide your trading activity for today. So let's see what we have in the comment section. Any questions? Okay, I can see 304. Thumbs up to you. Good morning. Eunice84, good morning to you. Glad to have you around. You're welcome. 6576, Dino, I can see you. Good morning to you guys. 8603, good morning. Chaito, good morning. How are you doing today? All right, so in the absence of no questions, I want to assume that we're on the same page, so I will just move on to the next instrument for today. So the next instrument we are going to be looking at today is going to be the USTech100. Now on the USTech100, we have been profitable so far this week as regards to the current market structure, as you can see here. So since the beginning of the week, we have been buying. Those, remember, we sold initially at the beginning of the week. So let's quickly run through what really happened in this market as at the first day of this week. So the first thing we observed at the beginning of the week was the fact that price action was trading below our weekly key level, which was situated at the $15,000 mark. And for the fact that price action is trading below that key level, it was a clear sign that we look out for selling opportunities in this particular market. Then in addition to that key level, we saw how price action started with a consolidation phase where price action was ranging between the 14,945 and the 14,890 to give us a flat channel to work with. And with the breakdown of that flat channel during the early hours of Monday's trading session, we had a signal that price action is likely going to be starting the first half of the week on a bearish note. And with the situation we have here, we were looking out for So we were looking out for a retest of structure to join the bearish move to the downside, and price came back to retest structure. We had a sell stop order below the 14,890, and we had our first position triggered at this point in time. And price action dropped significantly in our favor. At least the first position moved over 200 pips, while the second position we took advantage of here moved over 100 pips in our favor before we begin to see the buy pressure resume on Tuesday. And on Tuesday's trading session, we had this trend line here identified, and we said we were going to be using this to guide our trading activity. So what we were looking out for is price action. If it remains below the trend line, we continue to look out for selling opportunities. But if it gets broken to the upside, we want to be buying the USTech100. And what we saw here on Tuesday's trading session was the breakout of that 14,800, which triggered our buy stop order. And since that moment, we have been buying the USTech100 all the way into where price action is at this point in time. And for those who had been part of this trade, well done to you. And on Wednesday as well, we also had the privilege of adding more position to our existing trade after identifying the simple channel between the 14,910 and the 14,850, where the breakout of the resistance and retest of structure welcomed more opportunities to buy the USTech100. So it has been quite a very profitable week for us so far so good. Now, going into the New York session today, what is going to be our plans and how do we intend to take advantage of any potential trading opportunities today? Well, the first thing I would like us to acknowledge here is the highest point where price action has been for this week, which is situated at the 15,050 level, which is yet to be broken to the upside. And if we look at what has been happening around here since Wednesday, you will see how buyers have been struggling around that area. So as soon as price action gets into the $15,050 level, we saw how sellers jumped in to negate all buyers' attempt at this point. And since yesterday's trading session, you will see that buyers are still finding it difficult to find new high, as you can see here, hereby giving us a sign that sellers might likely be pushing price to the downside. And in fact, yesterday we saw how price action broke down both the $15,000 mark and this ascending trend line we identified on Wednesday that we said we will be using to guide trading activity for the later part of the week. And for the fact that price action broke down this trend line, we might likely be seeing an opportunity to sell today. And in addition to that, the inability of price action to break or find new highs above the $15,050 level is a suspect that sellers might likely be coming in anytime soon. So in as much as we've identified this whole situation here and considering the fact that we could be seeing selling pressure, the next thing I want to be doing is to connect the lower higher lows here to give us a trend line to work with for today. So this is the trend line we shall be using to guide our trading activity for today. So what this simply means is that if price remains above the trend line, we would look out for buying opportunities. But if price action breaches the trend line to the downside, that is, breaks the trend line to the downside, we would have no other choice than to look out for selling opportunity on this one. Now, I want to extend the key level. Remember this $15,000 mark, a very strong psychological area considering the round figure of that price. It was our key level for this week, and we are going to be using that to guide trading activity for today. So to sell the USTech100 based on the continued selling pressure we have been noticing around that $15,050 mark, a breakdown of this trend line will be what we are looking out for to join a bearish momentum to the downside. And in fact, if price action breaks down the $15,000 mark, it would have also broken down this ascending trend line we just identified, and this would be a clear sign that the trend line may no longer have the capacity to negate the bearish momentum anymore. And once the breakdown happens, this is a clear sign for us to start looking out for selling opportunities. Now remember, we are not getting too excited here when price breaks down the trend line. What we are going to be doing next is to scale down into our lower time frame where we shall be looking out for selling opportunities. We want to see signs that sellers are gradually gaining momentum, which would reflect on the chart as price action coming back to retest the $15,000 mark or the ascending trend line that was broken to incite an opportunity to sell the USTech100. So that is how we are going to be selling the USTech100 for today. So we want to see a breakdown of both the ascending trend line and the $15,000 mark to consider selling the USTech100. However, if price action continues to remain above the structure, then at this point, I would have no other choice than to look out for buying opportunity only if we do have a breakout retest of the $15,000 50-cent level to join any momentum to the upside on this one. Now you can see that our center of focus for today's trading activity is simply between the $15,000 mark and the $15,000 mark and the $15,000 50-cent level. So this is where our center of focus is going to be for today, and depending on what happens here will determine where price action is likely going to be going. So a breakout of the 15,050 will welcome buying opportunities, while the breakdown of the $15,000 mark will be welcoming selling opportunities in this market. So we want to mark these levels out on our chart so that we can be able to use it as a reference point whenever we are about to make our independent decisions for today. So if you have any questions, these are my views here on the US Tech 100. If you have any questions regarding what I just explained, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the comment section and see if there are any questions, and you can as well take that time out to mark these levels out on your chart, as you need them to make you use as reference point to guide your trading activities for today. So it's question time. If you have questions, feel free to let me know in the comment section, and let's see how things work out from this point. Okay, I can see your comment, Talham. Good morning to you. Glad to have you around. I see your compliments. Okay. 6169 is asking, please do answer someone. Who are you talking to there? Do you have any inquiry for me earlier? I'm not sure I saw anyone. 6169, I would advise that you get in touch with the contact center. Very important for this inquiry you are asking. That's the only place you can get an appropriate response as regards to your question. So I suggest you get in touch with the contact center. You can get the link on the website. You can get the contact on the website. Okay. Please do that so that you can get a swift response. All right, so in the absence of no questions, so I want to assume that we're on the same page here. So I will be moving on to the next instrument for this week. And the next instrument we are going to be treating is going to be the GBPUSD. Now, on the GBPUSD, it has been quite an interesting situation for us this week. Remember, we are profitable on the GBPUSD as we have been selling since the beginning of the week. So let's run through what has really been going on this chart since we started the week. So we have a situation here where price action was initially ranging between the 1.275 and the 1.2700 area to emphasize the level of indecision in this particular market. Then in addition to this flat channel we have here is this trend line, this ascending trend line we identified, which was also going to be serving as a major yardstick to guide our trading activity for this week. And in fact, this trend line was identified on the higher time frame, on our 4 hours time frame, of course. And for the sake of those who are not part of our live session and for the sake of clarity, let's run through the 4 hours time frame so that we can all be on the same page here before I go into the details of what to look out for today. So right here on the 4 hours time frame, this was the trend line I was talking about here, and it was serving as a major yardstick to guide our trading activity for this week. And in fact, we saw the breakdown of that trend line, which triggered our sell position. And since then, we sold the GBPUSD all the way into the downside as we saw price action move over 140 pips in that direction. And don't forget that we also had the privilege of maximizing the potential of that bearish move as we had multiple entries on this one. So let me show you what we saw here. So we had the first sell position around the 1.27250 after the breakdown retest of that ascending trend line. Then we also had the privilege of adding more position, had the breakdown of the 1.271 and then the breakdown of the 1.2700 level. So in fact, we had a minimum of 3 positions running on this one, where the first position ran about 120 pips, the second position ran about 100 pips, and the third position ran close to 100 pips as well. So as at the first half of the week, we were already over 300 pips in profit on the GBPUSD. And since price action tested the 1.261 on Wednesday, there is an interesting situation we have here. Price has been caught within a range between the 1.265 and the 1.261, which is a sign that sellers are still very indecisive, not knowing where price action is likely going to be going. And you all know how we use this kind of flat channel in this community. When price action is caught within a range like this, we always want to remain patient, waiting for structures to mature before we jump into any position. And the signal we will be waiting for in this kind of situation is for price action to either break out of the 1.265 for us to start considering buying the US or the GBPUSD, or the breakdown of the 1.26100 level, that is the support line of this flat channel, to look out for selling opportunities in this market. Now that we are going into the New York session today, how do we intend to use this structure to guide our trading activity? Now, one thing I would like us to note here is that this structure we have here, that is this flat channel, has a potential of turning into both a reversal pattern and a trend continuation pattern. So let us first of all talk about the possibilities of this pattern transitioning into a reversal pattern. Now, the first thing I would like to acknowledge here is this descending trend line, which has been supporting this bearish momentum since the beginning of the week, as you can see. So you want to mark this level out on your chart. So what this simply means is that as long as price action remains below this descending trend line, we'll have no other choice than to look out for selling opportunities. But for the fact that buyers have continued to negate all selling attempts around the 1.261, this situation here increases the chance that price action is likely going to be breaking out of that resistance at the 1.26500 level. And one thing about the resistance line along the 1.26500 area is the fact that it also shares a confluence with that descending trend line, giving us a very important confluence to work with for buying opportunities for today. So if this happens, that this price breaks out of the 1.265, then at this point it would have broken out of that descending trend line for the first time this week, and a breakout of a descending trend line will be a sign that buyers are finally taking over, breaking through from the sellers at that point. Now, one thing I would like to state here is that we are not going to be getting too excited when price action breaks out of the structure, as we're going to need some confirmation to join that move to the upside. But if you have been selling the GBPUSD this week, that means you have been profitable. So you could test the waters around that area and risk some of the profit you had made so far this week by placing a buy stop order above the 1.265. But if you are joining this position for the first time this week and you've not made profits on the GBPUSD, I would advise that we remain cautious and wait for a retest of structure to happen before joining any bullish momentum at this particular point in time. So this is how we are going to be managing the buy position on the GBPUSD. Now, I would like to state here that if price action continues to the upside, we have key levels that we can use to maximize the potential of this bullish move if price will be going to the upside. So we have key levels like the 1.2700, the 1.27250, and the 1.27500 level. So these levels are levels where we can look out for more opportunities to maximize the potential of this bullish move. So if we do have a breakout retest of these levels, we definitely want to be adding more position to our existing trade. Now, there is a caveat to this whole structure here. Considering the fact that price action has been bearish since the beginning of the week, this same level I highlighted here for more opportunities to buy should be treated with caution. And the reason why I have said this is simply because if price gets into the structure, it is possible that we could see some selling pressure resume around that area to push price to the downside. So as soon as price gets into this level that I highlighted here, we want to hold on and see how price action will be reacting to that levels. So if it gets into that structure, we need to move all stop losses on all buy positions to secure the current position while we wait out and see how price action reacts to these levels at the 1.27, 1.2725, and the 1.275 to see if we are going to be having the breakout retest for buying opportunity. And if we start seeing rejection of this zone, then that means that sellers might likely be getting ready to push price to the downside. So let's be very mindful as soon as price action gets into these structures. So that is how we are going to be managing a buy position on the GBP USD for today. However, in as much as we're looking out for buying opportunity in this market, you know how we do it in this community. We also want to consider the potentials that the sellers do have at this particular point. And if we can consider the bearish momentum since the beginning of the week, it's reasonable that we look out for opportunities to sell if the market states otherwise. Now, with the situation we have here, for me to start considering selling the GBP USD at this juncture, I would rather see price action break through the 1.261, which has been a very strong buying niche since the beginning of the week, to give me a sign of selling. So I want to see a breakdown of the structure. Then we scale down into our lower time frame, where I want to see a retest of structure here by confirming how sellers are gradually gaining momentum before joining any bearish move to the downside. So this is how we are going to be managing our trade on the GBP USD today. So you can see that the center of focus for today is simply between the 1.265 and the 1.26100 area. So you want to be marking these levels out on your chart, as you will be using it as a reference point to guide trading activities for today. So if you have any questions regarding what I just explained so far, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the chart and see if there are any questions before we move on to the next instrument. Okay, so I can see greetings from 908686, Susie MB, and 215. All right. So in the absence of no questions, probably I want to assume, okay, I can see 4049. I'm not sure I can see what the emoji is there. All right, so in the absence of no questions, I want to assume that we're on the same page here. So let's see how this plays out going forward. Now, we shall be moving into the next instrument for today, and the next pair we shall be looking at is the XAUUSD, which is the gold spot. Now, on the XAUUSD, things has been very choppy in the last 48 hours in this market, as price action has been caught within a range. Though we have been selling this commodity since the beginning of the week, remember. So let's run through how the week started for us on the XAUUSD. So at the beginning of the week, we acknowledge our price action was caught within a range, and that was between the 1,935, which was our key level for the week, and then we had the support of that range around the $1,922 level. And this was a very beautiful consolidation phase, a flat channel to work with. And you know how we use our flat channels. You know how we do it in this community. We wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. However, in addition to that flat channel we identified, there was this ascending trend line which was supporting bullish momentum since last week Thursday. And in fact, because of this situation here, we were thinking that price action will be going to the upside. And I told us all that we are going to be looking out for buying opportunities if price action remains above this ascending trend line. But unfortunately for the buyers, that wasn't the case, as we saw price action finally break down that trend line for the first time in 2 days. On Monday's trading session, New York trading session, we saw the breakdown of that structure. We saw price action come back to retest the trend line, and with continued selling pressure around the $1,928.50 area, we begin to consider selling the XAUUSD. And since then, we have been selling this commodity. As you can see, price action since then had moved over 300 pips in our favor. Then remember, we also had the privilege of maximizing this opportunity by adding more positions at the breakdown of the 1,922 and also the breakdown of the 1,913 level. So for those who had been part of this profitable journey so far, well done to you guys for being on standby to have caught this opportunity. Now that we are heading into the New York session today, what is going to be our plans and how do we intend to maximize the potential of any move at this point? Well, the first thing I would like us to acknowledge here is the fact that price action has been consolidating in the last couple of days. As you can see, we have price action caught within the $1,913.50 level and the $1,902.50 level, and this is a clear sign that the market is very indecisive at this point, as participants are still not sure of where price action is likely going to be going. And with this kind of situation, a catalyst in form of an economic event is what might likely incite a momentum either way. And from a technical standpoint, whenever we have a flat channel like this, you know that what we want to do is to remain patient and wait for either the resistant line of the channel to be broken to the upside to give us an opportunity to buy, or the breakdown of the support line of the channel to give us an opportunity to sell. And not only if this happens can we be considering selling or buying the XAUUSD. However, within this channel, I'm beginning to see that there is a structure we can actually use to join a bullish or bearish momentum even before the breakout of the resistance line or the breakdown of the support line could happen, so that we can maximize the potential of this move. And now to do this for us today, I have a trend line. So we have this descending trend line, which has been a major determinant of price action since the beginning of this week, as you can see here. And since we had the breakdown of this trend line here on Tuesday, you will see that price action has remained below that trend line. And what this simply means is that it reveals the presence of sellers in this current market structures, as the trend line has continued to negate any attempt by the buyers to break through that structure. And from a technical standpoint, as long as price action remains below this descending trend line, we have no other choice than to continue to look out for selling opportunities. Now, I would like to do some readjustment with this descending trend line here. So give me a moment. Let's just adjust this a little bit so that I can capture most of the pivot eyes that we have here. So here we go now. So this morning I had a sell stop order because of price action remaining below the trend line. I decided to have a sell stop order below the 1,905 area, and in fact price action moved about 45-50 pips in my favor, moved my stop loss accordingly, and at this point I have been taken out of this position. So at this point in time, I'm beginning to be very doubtful of what is really going to be going on here. And one of the things that is making me doubt the seller's potential in this market is the fact that we're beginning to see some higher lows in this market. Now look at the lowest point where price action is for this week, which is situated at the 1,893 level, and look at what we have here around the $1,902.50 level, giving us a higher low to work with. And when we begin to see higher lows in the market, it's a clear sign that buyers are gradually gaining momentum behind the scenes. And once we have higher lows like this, the next thing we want to be doing is to connect the series of higher lows and use it as a yardstick to guide trading activities going forward. So what this simply means is that if price remains above this ascending trend line, we will be looking out for structures and patterns that will be supporting a bullish momentum. So let's bring back our candle chart and then do some little readjustment to this one so that it can capture all the wicks there. So I will be deleting this one as it is no longer relevant at this point. So with the current situation here, and for the fact that price action remains above this bullish trend line, I'm of the opinion that we shall be looking out for buying opportunities above the $1,905.50 level. And one thing here is that if price action breaks out of the 1,905 level, price action would have also broken out of this descending trend line, which is a clear sign that the trend line may no longer have the capacity to negate the bullish attempt. Now, a breakout will be making us to look out for buying opportunities. Now, remember, we are not going to be getting too excited at this point, as we'll still need some confirmation to happen before joining any bullish momentum at this point. So for us to buy here, we want to see a breakout of both the $1,905.50 level and that bearish trend line for us to have a signal. And what we are going to be doing once the breakout happens is to scale down into a much more lower time frame. It could be your 15 minutes, 10 minutes, 5 minutes, or even go as low as your 3 minutes time frame to look out for a retest of structure. What we simply want to see is signs that sellers are finding it difficult to drop below the trend line. So if we continue to see buy pressure above this area, then we can finally join a bullish momentum to the upside. And in fact, we have the privilege of maximizing this opportunity as we have key levels at the $1,910 and the $1,913.50 level to maximize the potential of this bullish move. So once price breaks out to retest the structures, we want to be adding more position to our existing trade on the XAUUSD. So that is how we are going to be managing a buy position on this instrument for today. So we want to mark these levels out so that we can use it to guide our trading activity. So as long as price remains above this trend line, we remain bullish on the XAUUSD. However, in as much as we're looking out for buying opportunity, we cannot ignore the potentials of sellers. As you can see, it has been very bearish since the beginning of the week. And in fact, for us to sell at this particular point in time, I would rather see price action break through that ascending trend line we identify, which also shares a confluence with that $1,902.50 level. So if we do have a breakdown of both the ascending trend line and the 1,902, then at this point we will start considering selling the XAUUSD. And remember, we are not going to be getting too excited at this juncture. We should wait for confirmations to happen, and you always know how we do that. We scale down into a lower time frame to look out for retest of either the $1,902.50 level or the trend line that was broken to the downside to look out for selling opportunities to join that decline to the downside. And if price action goes on to break down the 1,893 level, which happens to be the lowest point where price action has been for this week, then we have no other choice than to look out for more opportunities below the structure to sell the XAUUSD. But from this current structure I'm seeing here, I'm going to be leaning towards a bullish momentum as things are looking very bullish at this particular point in time. So with the trend line identified here, please mark this level out on your chart, as it's going to be a very, very key level that we will be using to maximize the potential of any trading opportunities today. So that is that on the XAUUSD. A very simple setup we have here. We have a trend line, we have the 1,905.50 level to guide bullish momentum, and we have the $1,902.50 level to guide selling opportunities in this market. So these are my views here on the XAUUSD. If you have any questions, feel free to let me know in the comment section below. So I will be taking the next 10 to 15 seconds to see if there will be questions, while you can also use that time to mark the levels out on your chart, and as well screenshot my screen if you want to, so that you can of course use them as reference point when you're about to make your independent decision. All right, so in the absence of no questions, I want to assume that we're on the same page. So I will move on to the last instrument for this week, which is the USDJPY. Now, on the USDJPY, it has been a bullish momentum since the beginning of this week. Despite some consolidation phase, we were able to capture a bullish move at the beginning of the week. Remember, price action was initially ranging between that 143.900 level and the 143.250 area, where we begin to notice the appearance of buy pressure around this area. So as a result of the situation here, we anticipated that we are going to be buying at the breakout retest of the 143.450, and since that moment we have been buying the USD JPY for this week. And remember, we had the privilege of maximizing the potential of this bullish move by adding more positions, had the breakout of structures like the 143.750. We also had the breakout retest of the key level, had the 143.900 level, and we also had the privilege of breaking out of the 144.150 as we rode the move all the way to the upside. So it has been quite a profitable trade for us on the USDJPY so far this week. Now that we are going into the New York session today, how do we intend to position ourselves for any trading opportunities today? Well, the first thing I'm going to be doing here on the 1 hour time frame is to acknowledge the fact that we have consistently seen higher highs and higher lows in this market. And when we connected the series of higher lows, we saw a couple of trend lines which we have been using to guide our trading activities since the beginning of this week, as you can see there. And as long as price action remains above this trend line, we have no other choice than to look out for buying opportunities. The only thing that will make us sell the USDJPY at this current juncture in the market is to see price action break down that ascending trend line. But if we do not see a breakdown of the ascending trend line, we cannot consider selling the USDJPY. So since we are looking out for buying opportunities in this market, how can we capture any bullish momentum at this point in time? Well, first of all, personally, I'm already out of all buy positions, but if you still have a buy position running at this point, I will suggest that you move all stop losses to secure the current position, as anywhere around the 144.610 and the 144.450 seems most appropriate to move all stop losses to. This is for those who still have a buy position running in this particular market. Now let's move into the details of what to look out for today. Now, the first thing I did this morning while trying to monitor what could really happen today is the first thing I saw here was the 144.900, a strong psychological level considering the round figure of that price. And one thing I noticed here is that since the New York session yesterday, we saw how buyers struggled around that area. We saw every attempt was negated by the sellers. You saw what happened here. We saw what happened during the later part of the New York session yesterday. And during the early hours of today, we saw this sharp rejection of that 144.900. In fact, not just a rejection, we even had a shooting star candle, which from a technical standpoint is a sign that sellers are very, very present around that area. And in the last couple of hours here, we saw our buyers still find it difficult to break through that 144.900. And at this point, I decided that we might likely be seeing a bearish move anytime soon. And as a result of this situation here, if price does not break out of the 144.900, we are not going to be considering buying the USDJPY again for today. So for me to buy the USDJPY today, I want to see a breakout of that 144.900 to the upside. That is price action taking out all the sell positions that are here, and then if possible, see some liquidity in favor of the buyers, which would reflect on the chart as a retest of the 144.900 and that trend line to inside a trend continuation to the upside. So if I don't see price action above the 144.900, I wouldn't be considering buying the USD JPY today. However, if the sell pressure we have been noticing around the 144.900 persists today, then we might likely be seeing price action breaking down the remaining ascending trend line we have here. And if at this point we sight a breakdown of this ascending trend line, then we shall be getting ready to sell the USDJPY. So to sell right now, I want to see a breakdown. Remember, we are not getting too excited here. We would need some confirmation to happen before we join any bearish move here. So we shall be scaling down into our lower time frame, where a retest of this trend line or the structure along the 144.700 will be that sign we are looking out for to join the bearish move to the downside. And in fact, when we see this, we can have a sell stop order below the 144.400 to maximize this bearish move to the downside. So this is what we shall be looking at for today to be part of any move to the downside. So our center of focus for today is simply along the 144.900, where we shall be looking out for buying opportunity if we do have a breakout retest of structure. And the next one is the trend line here, where a breakdown retest of the trend line will be welcoming a selling opportunity in this particular market. So we want to mark these levels out on our chart and use them as a reference point to guide our trading activity for this week, and even to make things simpler for us to be able to capture this bearish move early enough. Let's mark out this level here, which is situated along the 144.600, another psychological level there. So I will give this a different color. So let me give it a dirty green color. So we have 144.600 level, where we shall be using that to guide this selling opportunity if we do have a breakdown retest of this level today. And one thing about it is that if a breakdown of the 144.600 happens, price also would have broken down this ascending trend line to welcome the bearish signal in this particular market. So this is how we are going to be managing our trades on the USDJPY for today. I hope I made myself clear. If you think I need to shed more light on a particular aspect, feel free to let me know in the comment section as usual. So I will be taking the next 10 to 15 seconds to read through the comment section and see if there are questions, and at the same time use that time to mark these levels out on your chart or screenshot my screen if you want to, so that you can use it as a reference point to guide your trading activity for today. Aki88, I see your comments. Thank you very much for the compliment. I really appreciate that. Hello, Vincent. How are you doing this morning? Glad to have you around. Is Eunice still around in the house? Are you still around? Let me know in the comment section if you got the explanation here. All right. So thank you very much. Okay, you are welcome, Eunice. So that's great. So in the absence of no questions, I want to assume that we are on the same page here. So on this note, I want to call it a day. It has been a wonderful moment out here today. And in fact, we had a fairly good week as we were able to capture very important positions during the course of the week. So let's try to round off the week on a positive note by ensuring that we continue to remain patient for our structures to mature before opening any position in this market. And one thing we have done here is to try to simulate all the potential scenarios that could happen in this market and how we are going to be managing those trades if price action does anything around the structures we have here. So far so good this week. We have been treating and reviewing the USOILSPOT, the USTech100, XAUUSD, GBPUSD, USD, and USDJPY USDJPY. So it has been a wonderful week, and I wish you all best of luck during the New York session today. And for those who are joining us for the first time, I hope you are able to gain one or two things from what we discussed today. And trust me, the more time you spend with us in this community, the more you get to understand how things works, and you would eventually be able to use the information you have gathered here to make your independent decision on your account. So on this note, I wish you all best of luck, and do have a wonderful and beautiful weekend, and hoping to see you on Monday, same time, 10 a.m. UTC, 11 a.m. West African time, as we plan to come back here again to start the new week and the new month on a fresh new note. Do have a wonderful day, everyone. Bye-bye.